Hello, and welcome to another update video about Bitcoin. So today, we are going to talk about the daily chart briefly, then take a look at the shorter time frame. In yesterday's video, I already briefly talked about how these corrections are best traded from an Elliott Wave point of view. I mean, essentially, there are hundreds of strategies and ways to trade these charts, also with Elliott Wave, but I shared sort of my view, what is best for most people to do. So feel free to check out yesterday's last video if you're interested. Today, we also have the member live stream at 5 p.m. UTC. Members have voted for the topic, how to trade with Elliott Waves. So while I cannot give you a complete overview about everything, it is a live stream that will give a really good overview about different tactics and strategies and how to understand the analysis and how to use it for trading from my point of view. So if you're interested in that, feel free to check out the membership. You'll find the links in the description, and members get the link anyway. It's 5 p.m. UTC, and you can watch the recordings anyway. So looking at the daily chart here, I mean, still caught in this ongoing range, right? So what did we talk about? Scaling in this support area, or even starting to scale in slightly above, while employing, wise position size management methods and just simple trader math, really. The nearest critical support on the daily time frame remains at around $50,700, and as long as the chart and the price stays above it, we are in an overall bullish market and bullish scenario. I'm tracking two main pathways here in this correction. Surely there are more that apply, because in corrections the exact micro count is unpredictable, and I could stop tracking it, but that would not really be very helpful, because we want to track when the first impulse to the upside shows, because that will tell us when the correction is likely over. Surely the correction could be over. It could have bottomed here in a wave 4, but it's not very clear because the rally was only a 3-wave move, okay? So therefore it is still probable that this correction will continue to unfold in various ways. Doesn't mean we have to dip into the orange support range very deep again. It could be, for example, that it's just forming a large ABC flat, and the B wave does overshoot in white, and then the C wave might never end below the A wave low. So all of these are potentials that we're tracking. Therefore, it's important to just recognize that, and maybe just when trading these corrections, just stay on the larger time frame. Not trading aggressively within the correction. That's typically not the best way to do it. Essentially, I think it's helpful to view these corrective structures as ranges. We have very clear range parameters. We have a resistance area on the smaller time frame, and we have a support area here on the daily time frame as well, also on the shorter time frames. And support is 61.8K, 55.4 and 50.7K. We have to technically give the correction space down to 50.7K, even though I have a hard time, let's say, believing it would come down to the 50% fib level, but I could see possibly the range between around about 59K and 55K to be tested before the correction is over. So it's quite a bullish assessment. That's not bearish at all. I'm just highlighting here, first of all, the risk. So we just have to give it more space if the market needs that space to continue the correction. But more importantly, it's an opportunity. It's just to highlight the opportunities. If there is another dip into the support zone, it could be a buy the dip opportunity in an overall bullish market. Now, if you use that, that's entirely up to you. I can really only share with you the parameters from an analysis point of view. Okay, so let's take a look at these shorter time frames. Here, no adjustments needed. We're tracking here two main potentials on the shorter time frame. First of all, this wave 4 is a W, X, Y structure, in which an A wave bottomed in wave Y here around the 3rd of April. Then we have this B wave rally, which is possibly unfolding right now in the yellow count. In this count, we need to see a rejection before the price breaks above 71,760. And then a C wave down could send the price lower, obviously, possibly below the wave W low, which was formed around 61K, and could target that sort of target projection area around 59, maybe even 55K. This is one potential, but there is currently no evidence for a local top, and it would take a break below the last swing low here at around 66K to confirm at least a local top in wave B, and then we can track if the C wave to the downside is unfolding. That's one potential I'm tracking. The other potential is an extended B wave, which might be unfolding in the white count, A wave, B wave, C wave. In this case, the B wave is still unfolding and is currently unfolding as an A, B, C structure. And the C wave would be an ending diagonal, which is a 5-wave move, but it's not impulsive. So we don't have very clear probabilities here at the moment. And yeah, in this wave C of B, we're now likely moving in this sort of ending diagonal pattern. And again, in here we have 5 waves and the third wave might be unfolding. So in this scenario, we should see after the next high, maybe another higher low and a higher high that could take us to around about 76K. Either way, there is currently no confirmation for a local top in place. And depending on how high the B wave goes, well, we will then be able to calculate a target for the C wave that could then end this correction. Of course, other interpretations possible, like a triangle pattern. Visually, it looks like a triangle. From an Elliott Wave point of view, yeah, you could count it as a triangle, but therefore I say, we won't be able to say the triangle is completed until we see a first upside breakout, an impulse to the upside, followed by a 3-wave pullback. So you want to be prepared by that with your core position, which ideally everybody has. Okay, so as, regardless of, whether we're trading around something or so, it's just strange sound outside, sorry. So regardless of whether you want to have a core position, you want to be prepared for that, and you don't want to give up your core position because we're in a bullish market just by trading too much in and out. So I think it's about having that core position and then trading in a soft way around it is sort of the best way to do it, given the uncertainty within corrections. That's my update about Bitcoin. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.